Hello and welcome to Wyckoff Training Academy. This is the continuation of previous video which was based on 155 version. So this video I'm going to discuss about this would this would be a 10 minutes video. Uh, it won't be longer than 10 minutes. So this is based on this video. In this video, we are going to discuss about um, the Weiss wave tool, which was developed by David Weiss, late David Weiss, uh, from whom I learned a lot of things about Wyckoff. And so this tool, basically, what is there in this tool? Basically this video is for Wyckoff traders who know or who understand what Wyckoff method is all about. So in this particular tool, uh, first thing, in the Weiss wave, the original Weiss wave, everybody has to, like, for example, if I'm trading on a if I'm looking at a chart on a 5 minute, and if I switch it to 1 hour, I have to do the manual adjustment to the wave size. And if I switch to daily, then I have to do the manual adjustment wave size, which for the reversal. So what I've did, I've coded in a such a way that you don't have to do any manual adjustment into this one. And this is the first beauty of this one. You have two things, either index or either all market. All market means if you're trading on stocks and commodities and other things. And if you're trading on index or indices, you can use it as index. So I normally keep as index, so that uh, because the volume differs from instrument to instrument. So if your instrument, or if your the market which you're trading, if it provides you a real-time volume, then you can use it. You can keep all market, and if it is not providing, then you can switch to index. So as this market, like S&P 500 provides the volume, so you can use it. You can keep the setting as all market. It will automatically choose the best wave size, and it will give you all the insight according to the teaching of David Weiss, or the original concept of Weiss wave. One another feature which I have added, that is multiple time frame analysis. Like, it will give you what is happening. It will show you, like, for example, on 15 minutes the volume is up. So if you go switch to 15 minutes, it will give you the wave in continuation, what the actual wave is. If you, like, for 30 minutes, it is showing you volume is down. If you choose 30 minutes, if it is telling us, it is showing us volume is down. And the reason I have, in this particular indicator, I have kept it the current volume, uh, so that you can capitalize. Like, for example, if you're doing a top down analysis, or making a combo of 5 10 5 1 5 minute 1 hour, or 5 minute 4 hour. So you should be in a position to understand, or you should be in a position, or you should have the exact data which is happening on a higher time frame. So if that in this is like on 1 hour, the selling is there. So if I come down to 5 minute, I would be looking out for 5 1 5, or 1 minute 1 hour combo, or 1 hour top down analysis. So it is showing you volume is down, and it goes up till weekly. But I don't normally do the weekly and daily. I normally use this time frames, because it fits into my day trading criteria. Though for swing traders, they can go for this 1 hour to weekly. So, like, for example, on weekly, or once again, weekly is down. So it will give you the data of weekly is down. As for us weekly, it is showing us supply. If I come down to 5 minutes, then it is showing us supply. So sometimes daily and weekly data may get affected, because due to different server timings and other things. So this will not happen in this one, price and volume. Along with this price and volume, I have developed an effort versus result indicator, which is in alignment of Weiss wave, but it gives us a different picture. Like, for example, if there is price, if there is supply, the effort is either would be up or down. So it gives us a very good, like what you say, price analysis tool or price analysis picture, wherein we can correlate what is happening in the volume and what is happening on the price and effort versus result. So effort versus result will help you in identifying which side has that effort. Effort is towards the downward side. That means if red volume is there or red histogram is there, that means effort is there is a lot of effort towards taking the price downwards. And in case of, like, for example, for upward movement or for upward trend, you can see over here, we see green effort as well as corresponding green volume. So this both, with the help of this 155 version, will give you a upper hand in trading, whereas uh, and it also helps us in identifying which side has a turning, or which side the market is going to turn. One another feature which I have added into it, that is oversold and overbought. So what does oversold means? We, like, the people who use market structure, trend channels, and other things, reverse trend lines and other things, and or either RSI, MACD, stochastic, we have oversold and overbought level. So what I did, this means oversold. This is the extent of supply. So either price would bounce back from this one. This is the one interpretation of oversold, or either it will break and test and it will go down. This is the second interpretation of oversold level. Sorry if you are hearing some background voices. Sorry. So after that, you can see it gives us overbought level as well. So when it gives us overbought level, that means price has reached a level wherein either price would go downwards or either it will break out and test this particular level and it will go upwards. So this gives us a very, like, this can compensate to buying or selling climax, though these are all subjective to market structure. So I hope this indicators add value into Wyckoff analysis and Wyckoff way of doing market analysis and trading. So this works on every time frame and all the indicators are non-repaint. But this one is something which is confirmed when the bar is completed. Though I have kept the feature to uh, keep the, what you can say, um, uh, a continuation, or like you can say when the bar is live, or when the particular candle or bar is live, it will keep on changing. Once the bar closes, it will confirm its position. Like for example, on 1 hour, you can see we have this bar is still in the under formation. It will take around 16 minutes to complete this bar. So it is suggesting us, uh, this was suggested as the demand supply imbalance. So what was expected, a price upward movement, and it did, and it went upwards. But overall trend is, overall pushes off towards downward side, and overall market is red. So uh, this is how it has. You have to interpret it, and like for example, I was talking about overbought, bought, and oversold area. So this girl gives us, like, this correspond to this one. This corresponds to somewhere to this one, and this correspond to somewhere this one. This correspond to somewhere this one. This would come. There would be 1 bar delay in overbought and oversold area, but over the period of time, it will help you in, because we cannot go, like, or we cannot come to a conclusion before composite operator. We would be 1 or 2 step behind the composite operator. That is more than enough for us, for if we want to make a good constructive career out of trading. So I hope this video has added some more value into your understanding. And one last thing, I have developed 144, that is 244, that is institutional demand and supply. So it is simple. Whenever there is institutional supply, pink stands for supply and blue stands for demand. We would look for a pullback if price comes back to this particular level. So I look for 155 version, no supply or a trend change or a new demand kind of a bar. If I get so on this particular level, I short it. I short sell at this particular point. Either ways, or I place my limit order below this one so that it can pull me into the trade, and then I can go for it. Someone asked me about swing trading. You can do swing trading, intraday trading, scalping, or a long-term trading or short-term trading. This is the universal tool. It applies on any freely, fairly, any market. Thanks a lot for watching the video.